Good luck.
Very good evening to all of you. On behalf of Auditing and Assurance Standards Board of Institute of Chartered Accountants of India, I welcome you all in today's webinar on key consideration in audit of SME IPOs. As we all are aware that today's topic is very relevant and there is a boom in IPO market also, and many SME IPOs are also there. So there are certain responsibilities which auditors need to undertake while auditing those, going those IPO, SME IPOs. So in order to tackle this very important topic, we are having three learned personalities. All are from our chartered accountant fraternity. C. Anirudh Tiwari ji, C. Manik Bansal ji, and C. Kapil Girdhar ji. So on behalf of AASB of ICI, I extend my warm welcome to all the learned chartered accountants. C. Anirudh Tiwari ji, C. Manik Bansal ji will deliberate on these two topics, and C. Kapil Girdhar ji will moderate as well as add his insights relating to this topic. So without wasting much more time, I request CA Kapil Kedarji to please start the proceedings of today's webinar. Over to you, Kapil sir, please.
Thank you, Anilji, and thanks to Auditing and Assurance Standards Board of ICI for giving me this opportunity to be part of this important topic today. And we have with us two very learned and eminent speakers, Mr. Manik Bansal and Mr. Anirudh Tiwari, who will be taking the session on SMEs IPOs. The session on SME IPOs cannot be more emphasized during this critical period where we see a flood, if I can use this word, of so many IPOs happening in India, and with the growth story of India getting momentum and becoming as important as it can be. A lot of IPOs has already happened at all the fields, which is main bourses, SMEs, non-SMEs, and also as part of the other international fundraising initiatives. So today's topic is very relevant, and the SME segment IPOs and the challenges around those IPOs and the preparedness and the compliances conditions is something which my professional friends Manik and Anirudh will cover in their presentation today with all of you over a period of I think 1.5 hours or 45 minutes from now onwards. And just to give you the numbers in terms of, just to make it more important and relevant, that the SME IPO market has seen significant growth, and the total amount of IPOs, the funds which was raised by way of IPOs in 23-24 financial year was 6,000 crores by way of 196 IPOs. And for financial year 24-25 till October 15, 2024, which is almost the half of the financial year, the number of IPOs have already been 159 with the fundraising amount of 5,700 crores. So the total amount of fundraised through SMEs IPOs in last year, which was 23-24, was 6,000 crores, and which has already almost been reached during this 6.5 months period in 24-25. So that's the rush, that's the excitement, that's the need of knowing that what SME IPOs are and how important and relevant they have become during these days. So this is about the topic for today, and I'll just introduce my eminent speakers for today's session. So we have with us Manik. Manik is a director in accounting advisory team of Pierreg Consulting, and he comes over with 13 years of experience in public accounting specialization. And he has earlier worked with Deloitte and Ernst & Young. In Ernst & Young, he was part of the GDS practice, which is the shared service support practice. And in Deloitte, he was part of the main consulting practice. In his EY stint, he has already led the initiative of setting up a team of SMEs, subject matter experts, to support audit procedures and non-recurring transaction accounting solutions such as business combinations, share-based payments, goodwill impairment, etc. And during his stint with Deloitte, he has worked extensively in external audit space and as part of GCOE, which is Global Center of Excellence initiatives of the organization. Manik also works closely with the National Professional Practice Group on credit impairment and to issue the practice aids and also subject specific publications. So that's about Manik, and we also have with us Anirudh Tiwari. So Anirudh is also qualified chartered accountant and law graduate, and he's having a vast experience in the field of bank audits, MSME, and risk advisory. He has also worked with one of the big four firms in his previous stints, and he's a special invitee on the committee of MSME and the Startup Institute of Chartered Accountants of India. And he's also the president of Global Entrepreneurship and Professional Associations, which is JEPA. And he also has various post qualifications degrees apart from being CA. So he's DISA qualified, which is a diploma in information system audits. He's also done certificate course on public finance, government and accounting, and he has also done certificate course on forensic audits and fraud detection. And Anirudh has been also well versed with bank audits. He has served a lot of banks, ranging from the credit exposure of 250 CR to 5,000 CR. So we'll get to know a lot of things from Anirudh in terms of his good experience from his banking experience as well. And he's also a regular speaker on various such forums like in bank audits, specializing monitoring MSME, startup, and GST. So their profiles are more detailed than what I could cover in this short span of time. But in the interest of time, I'll request Manik to start the session so that the audience can learn more from their experience on the IPO and the SMEs IPOs, and we learn more on this. So with this, I welcome you, Manik, for your session. Over to you. Thanks.
Thank you, Kapil ji. And I'm sure while our profile looks more detailed on the paper in terms of experience, you don't need even a paper to kind of talk about your experience. And no, but thank you for this gracious welcome. And hello, Anirudh. I'm glad for this opportunity to be co-facilitating this with you. Anil ji, thank you as always, and to the entire board. I know Sanjeev ji could not join us, but congratulations to him again on the re-election as well. But the platform that this board has created and the kind of topics and webinars that happen, and with the kind of frequency and rigor that this happens, at times it appears a little unbelievable. And I think I cannot really applaud this initiative anymore. I mean, it's beyond words. So thank you so much, and I always feel very blessed to be a part whenever I get a chance to kind of speak or discuss anything on this forum. Okay, I'll just take a minute and kind of pull up a small presentation for everybody to see. Is the presentation up and visible?
Yes, sir.
Yes,
Okay.
yes, Manik.
Okay. So as Kapilji also talked about initially in terms of how fast and with what pace this entire SME IPO space is growing, and I think this is going to be the first financial year where we might cross $1 billion as just in terms of fundraise just through the SME IPO. And as we are growing the opportunity, which is again a great initiative when it comes to SEBI's from a SEBI's point of view, at the same time, there are a lot of considerations, enhanced considerations that are coming into the picture. And from a regulatory standpoint, also, you would say the topic is so relevant that every other day you'll find new and new discussions happening either in the stock, markets, or you'll talk about how the SEBI's board is looking at it, the Securities Exchange Board of India. So while we talk about the audit considerations, and you might find that a lot of these things are something that you know already, please try to relate it to how this might be relevant for a company that's not as big as a size that it was the case earlier when the company used to go for an IPO. So for a relatively small company, they are going for an IPO. How will these specific legislature applications and requirements would change the way their finance function works, their internal processes work, how they see, how they are able to kind of cope up with it. And as an auditor, it becomes very critical for us to not only test and verify, but at times act as a coach to them to help them really understand that what they are dealing with. So with that, I'll just kind of talk few basic things first in terms of what is an SME IPO. An SME IPO came into the market to give opportunities of getting access to the capital markets for the companies that are not so big in size, who do not want to kind of rely only on debt or proprietors funds to expand their businesses. And it is kind of again democratizing the overall access to markets, so that the access to funds is not restricted only with the large ones. And from a investor perspective, it gives an opportunity to every retail investor as well to identify and invest in companies that can be one of those big shot companies in the future. So I think that that was the entire intent, to really help the MSME section of our economy from a capital allocation perspective, and to give them a boost. The range that you would see from an SME IPO is that the pre-issuance capital has to be sorry, the capital has to be less than or equal to 10 crores, and any issuer whose capital is more than 10 crores but up to 25 crores may still issue specific securities, but it is a separate section in the chapter that they should belong to. Now, very recently, there are a lot of further requirements that the SEBI board has come up with. One of them being very important, and once I share those requirements, I'll also share some additional context on why those requirements have come up. So, one requirement is that at least in 2 out of past 3 years, if you want to apply for an SME IPO, you should have an operating profit, that is EBITDA, of more than 1 CR. An SME IPO cannot be used as a vehicle to encash the promoter or pay back the promoter. So no funds raised from an SME IPO can be used to pay back the promoter directly or indirectly. They've gone to an extent to protect the investor in a way where they're saying that even when you are compiling the overall shares that you need to issue as a part of the SME IPO, you cannot really have more than 20% of the total bucket of shares that are offered from sale from the existing investors in that organization. The idea behind that is, with SME IPO kind of the market growing as a, in a gold rush kind of a phase, there are a lot of players which are also using it as a cash vehicle, wherein they want to either offload whatever their investments are, and they do not intend to kind of really have any sustainable or any significant growth as a part of their business, and just use it to cash out whatever position they are, and then kind of losses. You would have seen those cases in the news as well, that a small vehicle showroom kind of listed for an SME IPO, and it got an application of multi-hundred crores, wherein they were only requesting 5 crores as an capital. So I think, to really make sure that the actual goal of these SME IPOs, where they want to get these companies have access to capital markets, but then that capital should go back in terms of being investment either in their manpower, their plants, their distribution channels, any activity that helps grow their business, so that ultimately it helps turn the wheels of economy. So the idea is not to kind of give people an access to cash out or make any short term or windfall gains. So I think, with that in mind, as we go along, the regulatory environment around SME IPO will be more work on the mechanics of identify and fix, where you'll see regulators identifying what are the growing trends or what are the growing apprehensions whenever it comes to investors' money not being used for intended purposes, and they'll keep kind of increasing those restrictions. From an auditor's perspective, it is very important for us to be really cognizant of these restrictions, because the overall regulatory landscape is evolving, and then also share this with the companies wherein we feel that they are thinking towards going forward and either getting listed or even in the process of decision making of getting listed. We have to make them understand that, okay, what will work, what will not, and then stay very true to the overall objective. And when we are auditing this, especially the pre-IPO companies, I think it becomes very important that we understand all of these regulations. We don't understand that in terms of only as a checklist, but we understand them in a way that what is the objective behind it, so that when we are testing for this, we can identify if there are any inconsistent themes. Moving on, what is the background and the eligibility criteria? So adequate disclosures are made in the financial statements. The financial statements are duly certified by the auditors. Anybody who is a member of a the Institute of Chartered Accountants of India and holds a valid certificate issued by the peer review board stating that the accountant disclosures are made in the provisions are appropriate. The accounting standards prescribed the Companies Act have been followed. The financial statements present a true and fair view of the firm account, a lot of which we already do. So I'll not spend much time on this slide. Now let's talk about few areas where you need to think. A lot of this will overlap for the people who have already worked significantly when it comes to the supporting a company get ready for an IPO, or people who have been a part of auditing a company who's getting ready for an IPO. The audited financial statements. Majority of the time an auditor spends is reviewing the financial statements for last 3 years for a company who's an IPO bound company. Whether it is gap conversions, whether the overall completeness of the financial statements, whether it includes the right formats, the right accounting guidances have been followed, and whether the appropriate rules, whether it relates to consolidation or not, have been followed. Now, this is a complete process when you look at it, and especially in the case of an SME IPO, this becomes even more important because there's an element or an example that I can share with. When you are looking at a company, a large company that goes for an IPO, at least you'll start with a basis where you'll have an accrual basis of accounting. In case of this, you'll even see companies that were earlier recording their information on the cash basis and are now thinking that, okay, this year we are in accrual basis of accounting and we want to go for an IPO. But for the past 2 years, they only maintain their books on cash basis. And that is where the cash to accrual conversion also becomes very important. Now, if I talk about a couple of things around cash to accrual conversion, or what are the things that you need to take care of, it is the entire revenue recognition principles, things like Ind AS 115. So it becomes very important for you to see how the company has applied those principles, whether the organization is identifying the performance obligations appropriately, what kind of documentation they have to support the overall standalone selling price analysis, how are they identifying, or how their accounting policy clearly distinguishes between over time and point in time recognition, and whether it reconciles back to the performance obligation requirements. In the leases part as well, have they be able have can are they able to meet the Ind AS 116 requirements? How are they disclosing their overall financial statements, credit risk management strategy? Are they able to kind of talk about credit risk, liquidity risk, things like that in terms of disclosures in enough detail? How are they even talking about making sure that the correct debt position is reflected in their financial statements? So all of these conversations, while their advisors or the company's internal people will kind of work on preparing all of this information, from an auditor's perspective, especially looking at the financial statement, you'll have to consider or keep a mindset where you'll have to see that, hey, here is a company which was not even a part of the larger leagues, where whether their reports were made public or they were kind of operating at a scale where their business required all these processes to be in place. Now, all of a sudden, through this SME IPO route, they are going public, so they'll have to have all those regulations to be complied with, and all these process changes will also come in place at the same time. The last thing that you should also be cognizant of is the management's mindset. A lot of these companies that go for SME IPO, their owners or their senior management does not come with that mindset where they have dealt with a lot of process compliance, technology, consultants in the past. So they're not used to being challenged, being questioned, or being, adhere to a certain line, and they make decisions very differently. So I think that is where having those conversations as an auditor upfront in terms of what are your expectations are if you are auditing a company that is going for an SME IPO. I think they should not expect that the audit is going to be similar, because when they start on this journey, from an auditor's perspective, the expectations from you, from a regulator's perspective, and from the organization also changes significantly. I'll talk about few other examples as well. So internal controls is one area. I just talked about processes. While all of these companies would have some kind of control environment, whether it is as per the regulatory requirements or not, the way they run their business, they would know that they would want to prevent any leakages, have enough segregation of duties, make sure there's a maker checker. So they might have their own systems, but having them move from that to something that is in line with ICI guidances, something that is in line with, let's say, COSO's principles. So, and SEBI's listing LODR requirements is something that you should start talking to them very early on in the game, that as an auditor, you expect them to be compliant with this, and you expect them to have these kinds of processes in place, and then make them sensitize or make them sensitive about that. What would you expect as an evidence or as an outcome from an auditor's perspective? It's more of a proactive approach, similar to what I said earlier. It's more aligning them from a mindset perspective. And then when we audit these, for example, especially when we are auditing it for the first time, wherein the company has set up their internal controls for the first time, our responsibility as an auditor significantly goes up. We have to think about all the things right from the walkthrough stage, where we are identifying whether they have designed the controls appropriately, to an operating efficiency, where we are able to see that those controls did not really operate well during a part of year, or for 3 months after the implementation. Did they even work effectively towards the last part, or closer to the reporting date as well? And then things like management review controls, information produced by entities, information being used in the execution of controls. So all of those things have to be tested, documented, and as an auditor, significant challenges that I have seen is getting the right evidence. A lot of times you'll find verbal explanations being given to you in terms of how a reviewer ensured accuracy and completeness of data, what were the review steps performed, how did they review it. But it will be very hard to substantiate that with an evidence. And that is where, if we kind of explain the importance of this initially, when we go and audit either at the interim or at the year end or along the SME IPO process, we can expect a better sense of documentation. We can expect the evidences that we feel would meet the legal requirements and would help us determine the right level of assurances that we can gain from it. Now, this is more on the business processes part. Another thing where I've seen that there are significant challenges, the overall IT environment of such companies. So, do they have enough qualified people? How much processes have been outsourced to external vendor? Do they do do they have a clear policy that distinguishes between the IT application controls versus IT general controls, and how they approach from a management perspective? What is their approach towards testing it? Does the management have enough information in terms of the status of their vendors? Are they getting the SOC reports in time? So all of these things, they might be hearing it for the first time, But if we do not have this information, it becomes very important. It becomes very difficult for us to kind of really uh, come out of it with a reasonably good levels of assurance. So I think initial conversations followed by a very detailed review of all of this, even for something like their overall RCMs, whether it actually captures the IT environment related risks appropriately or not. So I think all of this really also helps as an auditor to you understanding the overall mindset or the vision that the management carries, whether they have invested enough time and energy in kind of getting these processes up and running before going for an IPO, or it is more of a rush towards an IPO with not enough time spent on getting ready for an IPO. So I think that will help you. These kind of things will help you also look at the overall numbers, the financial numbers with a different perspective. Tax filings and returns. It is more of a basic sanity check where the company has filed all the tax returns on time. There are no outstanding dues. They have obtained all the tax clearances, and then as a part of DRHP they have to disclose all the income tax assessments, any pending tax litigations or demands. So assessment of or verification of all the information that goes into DRHP also becomes very important, and then it has to be very consistent with what they have been disclosing over the past 3 years as a part of their financial reporting process. Accounting policies, I talked about few examples initially in terms of revenue recognition, depreciation, inventory valuation, provisions. Provisions is one area where there's a lot of focus whether the provisions are adequate, whether they are complete, whether the company has appropriate systems to identify what kind of provisions they need to make. As an auditor, the different ways we can check it, we can check if there's a contract master that is being maintained to make sure that all the recurring provisions are being recorded for. We can look at the past 3 months average of provisions that have been recorded and understand if there has been a significant skew, whether upside or downside. Any provisions that is being recorded intermittently but has a fixed amount, which means it is either getting missed or there's a gap in the overall contract framing of that provision. What is their provision to actual to reversal ratio? So, the actual provision that has been recorded versus when they receive the invoice, a, a more, spending some time on it from a data analytics perspective can really give you a lot of insight into how much time the company is spending into making sure that their provisions amount are complete and accurate, or they're kind of trying to push it more into record as you receive the invoice basis. So that is where a lot of technology today can be used to run all of these simulations or all of these checks that I was just talking about, and deploy it on clients data to say that if we are able to identify any anomalies. Now, Indias and gap compliances are, again, they're always important. I will take a couple of more minutes and talk more in terms of technology. I think as an auditor, what I have seen is if we go to these clients who are getting ready for an SME IPO, a lot of times they might not be very familiar with the kind of technology that can be used to identify data anomalies or data consistencies or trends. So I think having those conversations up front as well with them in terms of what are the tools and tools and methodologies that you intend to use as a part of your audit process, what kind of inputs your systems would require to efficiently look at the data, analyze it, and prepare or provide you with the right insights would be very important. One of the discussions that I had with one of my clients was we have our internal provisions analysis tool, and then we said that okay, this is the information that is required in this format, and they were very happy to understand that okay, at least we know what kind of information will be expected. And then when they were kind of developing their processes, they had a view specifically created for us wherein that information could be provided in a format that was directly available to us. So I think the basics from an auditor's perspective would not change, but again and again, you'll have to keep reminding throughout this audit process that you're dealing with a company that is going through a lot of change. So it's not just a capital raising exercise. From a company's internal systems processing, how their financial reporting process works, how big is their finance and accounts function, how do they interact or collaborate internally to make sure that the data from the plant, from the dispatch team, from others are made available. It is an evolutionary journey for a company to really get into this that early in their growth story. Because when it was a larger IPO only, they from a size perspective, they were still at a reasonable stage. And a part of these things were already a part of how they operated. Material contracts and legal compliances. A lot of times, this is where things get really difficult from an auditor's perspective. Because when an auditor goes through, an agreement with suppliers, customers, leases, loans, things like that, the accounting might be accurate in terms of the base numbers, but there are a lot of hidden clauses or a lot of fine detail language which would be indicative of any possible liability, any covenant that might get activated, and any other side arrangement which might result in omission of a liability from the balance sheet. So I think looking at these contracts, making sure that we are going beyond just looking at a few samples to understand that what is the overall principles by which the company gets into, specifically the loans and the agreement with the suppliers, how strongly covered they are in terms of their agreements with the customers, whether these things can really impact the overall liabilities or overall recoverability of the receivables, and then making sure that all of this is getting disclosed as a part of their financial reporting process or as a part of their financial statements. One thing where we specifically focus is the related party transactions, because the related party transactions, although they need to be disclosed, it has to be arm's length. But the reason, the policy, and the controls around related party have to be significantly looked at and verified. And then whether a related party transaction in its own or collectively is changing the overall view of the company in the market. So I think that is something that I personally see, is that whenever I look at a standalone financial statements, I'll say that, okay, with and without related party transactions, I would like to look at these two pictures to really understand what is the real growth story of that organization, and then whether these kinds of things are really a part of their DRHP, whether these kinds of things are effectively being disclosed as a part of their, either if it is even a risk management strategy or the disclosures as per India's 24. So I think it is very important that we as an auditor understand not just the checklist, but also the intent behind these transactions, and then base our judgments in terms of whether the disclosure is also able to give the future investor or the IPO subscriber the right and adequate amount of information. From a DRHP and final prospectus, I think our obligation or our scope of assurance is more towards that, it should be reviewed, it should have correct financial information, and then the risk disclosures, as I was just talking about, are accurate, complete, and in compliance with the SEBI ICDR regulations. Those key financial disclosures what we generally do from a practical perspective, we'll have the company map each of the numbers disclosed, whether it is as a part of the DRHP or the financial prospectus, with the audited financial statements. Or if it is mapped to another statement, then that statement should have a cross reference to the audited information. So I think that is one way we're creating this bridge and identifying any specific adjustments that goes from the audited financial statements to the DRHP to the final prospectus is very important to keep a control over the entire data chain, and such that it does not really result into a number reflected or kind of being given out in the market that we are not able to verify as a part of our overall procedures. Compliance and corporate governance norms that become applicable. I think my co-facilitator will also talk about this in more details in terms of how a company manages the overall corporate governance requirements and framework once they have successfully, procured funds through an SME IPO, and then they get into a post SME IPO world, which is going to be much more demanding from a regulatory perspective, and will have a lot of focus on what kind of corporate governance principles they have as an organization and how they are reflected in their decision making. Financial projections is another piece when it comes to overall disclosure of information, and wherein you cannot really verify financial projections with actual numbers. The having you're using tools like history matching, retrospective analysis, or sensitive analysis for that matter, if serves as very good principles to really use and apply in these kinds of situations to ensure that the basis on which financial projections are built, the assumptions, the significant values that have been used are not only accurate but also reflect the company's vision for the future. Also, when you specifically challenge things like significant assumptions, or when you do a retrospective analysis, retrospective analysis is where you would ask the management that, okay, what was your projection last year and what was your projection the year before? And then you'll see that how far off were they in their actuals versus projected financial statements. It will give you an understanding that how robust their internal controls, how robust their process of financial projection is. You may not be able to verify the financial projected information, or the FPI as we call it, but it will at least tell you that, okay, this is an average delta, or this is an average difference that we see in terms of what was projected versus what happened actually. And then you can use that as a basis to go back. Similarly, if changing one of the key assumptions result in a significant change in how the company's value would look like 3 years down the line, then as an auditor, it becomes very important for us to understand how that assumption was built in. We can challenge it using any publicly available information that we have right now. One of my clients had a very significant and consistent revenue growth rate that was baked into their financial projections model. But when we looked at their 5 year history or their 3 year history, the growth numbers were there, but it was not a flat, consistent rate. So we went back and challenged them that the industry is not growing at this rate. Your growth story does not say it's going to be consistent. And then we looked at certain industry body research reports which were predicting that, okay, this industry segment is going to grow at an average CAGR of this, and then compared that with what management had used. So a lot of times you'll see this front loading of growth, where a lot of growth will be consolidated in first 2 or 3 years of projections, whereas the further years would see reasonably less growth, because from a valuation perspective, it really helps companies to front load their growth, and then use compounding as a tool to receive higher valuations. So all of these things are something that as an auditor you'll have to understand. And if you're able to connect to the original objective of the IPO and then walk them through this journey and kind of just plug in the inference that you got from their internal control systems, the inference in terms of how they record their liabilities, how they are in terms of their compliance status, would also act as a measure when you're looking at their financial projections in terms of understanding the mindset of the management and how aggressive or conservative they are if you link it back to the overall objective. Key financial ratios again are a part of it, whether it is debt equity, liquidity ratios, return on equity, minimum net worth requirements. So all of this are more of a compliance checks, as we call it. Due diligence is again another requirement where the merchant banker should be assisted in the due diligence process by reviewing the company's books, contracts, and disclosures. It should be ensured that the company is adhering to the SEBI's due diligence guidelines and no material information is omitted or misrepresented. So, as an auditor, we can play a critical part in it in terms of making sure that when we are issuing our report, it lists out all the required information, and then the banker who's gonna do the due diligence can also kind of pick up relevant information and then kind of which will aid their diligence efforts overall when before they really go out to the market. Legal clearances is something which is a given, and it is more of ensuring, as I said, that being very cognizant of what are the different regulatory requirements and how those regulatory requirements are increasing, and then making sure that all those legal clearances are there, and also identifying who are the key regulatory bodies. For example, in this case it will be ROC, RBI, SEBI. So I think identifying all those bodies and getting in the right documents is very important. This was broadly that I had to cover. I know that there was a lot of information that I talked about, but I think before I close, I'll just say that the idea is that none of this might be new to you in terms of what you do as an auditor on a day-to-day basis. But then the appreciation of the fact that you're dealing with a company who's going through this big change in a very short span of time, and then using your judgment to make sure that you are able to deduce right levels of assurance will hold a key in terms of whether as an auditors or as a stakeholders in the capital markets we are able to provide the right levels of assurance for the investors or not. With that, I hand it back to Kapilji.
Thanks, Manik, for the wonderful session and detailing it so very well, covering the aspects related to the requirement of SME IPOs, the challenges, the due diligence piece, the legal requirements, and the auditor's roles corresponding to that. Because well, I think one of the very important aspect while doing the IPOs is that sometimes the auditors restricts their testing or their thought process to the specific documents or certifications they are actually required to deliver or give, for example, the comfort letters or the specific certificates. But it's equally important that every auditor should also be privy to in terms of what information is going in the DRHP and what the management is discussing in the DRHP as part of their existing businesses, future businesses, and if there is any and which may or may not give any contradiction in terms of what the auditor's experience of that business is, what based on the books of accounts they are auditing, and whether the same information or related information is going in the financial statements. So that makes the auditor's role broader than what is generally perceived in the market in terms of restricting it to the certificates or the comfort letters per se. So that's very well covered by you, Manik, and thanks for the session. And now I will request Anirudh Tiwari to start his session and enlighten us with more knowledge on this SME IPOs section. Over to you, Anirudh. Welcome. Thank you.
Thank you, Kedarji, and it's a really great honor to be here. Thanks to Sanjeev Singhal and AASB for inviting me here to interact and to deliver on a very you can say it's important topic nowadays, and it's very close to my heart because I deal in this area. At the initial start, you have very rightly said that nowadays it's a like a flood. Everybody is like बस मुझे तो IPO लेके आना है. They are not seeing what their financial are, what their business are, what exactly their need is, what they are going to utilize the fund. But the only thing is that they have thought that yes, I have to come with the IPO, and they have just proposed this. But issue is that as an auditor, when we see the financial statements of any company who has filed the DRHP or who has requested or filed their document for the listing, we we need to scrutinize it initially before filing it or before preparation it. So first we have to go through what exactly the stages are. It's not like one day process. It usually take 3 to 4 years to plan it properly in order to make a big jump or a big you can say achievement for your company. So first you have to plan it very well in 2 or 3 year. Why I'm saying 3 year? Because you can see initial, like Manikji has said, that we have to see at least 3 year performance, 3 financial year, 3 year of existence. So this shows how good we are at business, how our liquidity is, how our cash flows are, how the net worth is, how profitable my business is. So this all we have to see. But if you talk about the very initial phase, so in 1990s, mid 90s, we have witnessed one of the exchange which was formed that was called the Over the Counter Exchange of India, OTCE, which was started at mid 90s, but somehow, unfortunately, it could not work. But later, at the Prime Minister Task Force in Jan 2010, they have again recommended that we have to set up a new platform for the MSMEs. MSEs, I would say, because MSEs are the second largest employment provider in our country, and I can say in a worldwide, they are contributing around 29% to the GDP and 45% to the manufacturing and more than 40% to the overall export of country. So they are huge player, and they plays a very big role in our economy to our development and for our goal for the 5 trillion economy of India. So for that purpose, the first time BSC has come up with the SME platform MSA BSC Emerge in 2012, and later the NSE has also come with the same platform of NSE Emerge. So if we talk about how exactly the numbers are, what it has played in market. So if you see the number, so you will find that around, I have taken the data of July 24. So as on July, around 1,000 companies were there. Listed companies were there. Around 526 companies were at BSC SME and 476 companies were at NSC Emerge. And when you talk about the market cap of these SME platform, you will surprised. 3,29,291 crores of the market cap which NSE and BSE Emerge has reported. And if you talk about the total money which they have raised, so that is 17,945 crores of rupees they have raised from the market. Out of total companies, around 328 companies have migrated to the main board from this SME platform. So this was the good number for the MSME, which shows that yes, we have potential and yes, we can do something. And MSME has also the potential apart from the main board companies which are listing Nifty 50. If you talk about the big player which have raised the good funds or good amount of funds which they have raised. So the top one is the KP Green Engineering that has given the issue size of 189 CR, and the next one is Sahasra Electronic, which has given the issue size of 186, and the third one was SAR Televenture Limited, which has given 150 crores of rupees as issue size. So we have seen so many companies who are actually proving and changing changing our methodology or our thought process that yes, MSMEs was like कि बस एक street vendors हैं या छोटे shopkeepers हैं. That is not like that. Things has been evolving a lot. Things has gone changed, and now we can see huge potential in SMEs. Now, going on the process, so the first step is when you finalize your merchant banker. So whatever compliances you are talking about, so it's actually been taken care by your merchant banker and company secretary. So the most important document that we see is DRHP, this draft red herring prospectus. So we have to go through and we have to fill it very properly in a very detailed manner and in a very diligent manner. So just if you have DRHP, or if when you go through the DRHP, I will just brief what are the main component of this DRHP is though. So I have divided in the 4 category. The first one is basic introduction and particulars of the issue. So it actually comprises the summary of this offer document. Apart from this, the capital structure of the company, then basic some general information and basis for this issue price and some issue details, which will be covered in this part. Then post that we have the another segment, that is business section. This is very important section which every investor need to see in detail thoroughly. The business section, also the risk factor, what are the risk factor in the company, then industry section, how much market we have captured, how much potential have in the market, where in which sector we belongs to. Then management discussion and analysis, what the management vision is, what they are thinking, how their plan, what their plan is to go along and all. Apart from that, where we actually see as an auditor, that is called the financial information. In this financial state information, the first part we have to look at is the restated financial statement. सर हमें restated financial statement क्यों चाहिए होता है? Sir, already audited hai. We usually see when we discuss with the company, or you can say the Lala ji. So Lala ji usually answer, sir, IPO के लिए हमारा audit already पिछले 10 सालों से चला रहा है या पिछले 5 सालों से हमारा audit हो रहा है. So why you need restatement? आपको फिर से बनाने की क्या जरूरत है? Do you have some concern about the qualification or the talent of my previous auditor? Sir, it's not like that. ऐसा कुछ भी नहीं है. But the major concern is, in some cases, when you see the Lala G type company or a small scale company, so they do not follow completely Schedule 3. They do not give the complete disclosure which is required as per Schedule 3 or the Companies Act. They do not disclose adequately the related party transaction, arm length price, or in sometimes you also see the revenue recognition concept has not been followed as per the accounting standards. Likewise, if you talk about the related party 188 or the loans, whatever they have taken or given, that has not been properly documented. So for that reason, or another example, if you see, if we have some long pending data, so we have not created the expected credit loss in the financial, or you can say the provision which we have not created. So a lot of other issues or adjustment which is required to streamline the financial. सर ऐसा क्यों करना जरूरी है? सो दैट कि जो इन्वेस्टर है वो किसी भी कंपनी के फाइनेंशियल स्टेटमेंट्स को जब देखेगा तो उसे एक सिमेट्री दिखेगी, बिल्कुल सिमिलर दिखेगा नेचर, जो प्रेजेंटेशन है वो बिल्कुल सिमिलर दिखेगा. फॉर दैट रीजन इट इज रिक्वायर्ड टू रिस्टेट योर फाइनेंशियल स्टेटमेंट एट लीस्ट फॉर लास्ट 3 years. Then any or the financial indebtedness if you have, so this need to be reported in the financial information. Some other part you have to fill in, that is non-business section you can say. So here related to the management, the promoter, their experience, their background, promoter group, subsidiary, any outstanding litigation if they have contingent liabilities or some licenses or approval or any other parameter if they fail to report. Why I said contingent liability or licenses and all, because so many times when we file the DRHP, we get so many queries from the exchange. And if in some of the cases, I will show you some examples as well, where DRHP has been filed, it's been scrutinized by the exchange, and they have seen that the reported numbers are so much inflated, they are not reliable, and the DRHP has been rejected and this issue has been cancelled. So many instances I will completely need to be reported in this DRHP. Now, sir, what if I have filled in proper DRHP, I have done everything, anything else I need to do? Or as an auditor, सर अक्सर आप देखोगे जो आपका मर्चेंट बैंकर होता है, तो वो बोलेगा सर ये तो फॉर्मेट है, यू जस्ट साइन इट, नथिंग, यू डोंट नीड एनीथिंग. सर बी वेरी डिलीजेंट. Wherever you're signing as an auditor, you have to take the responsibility on which certificate you're signing and what is the basis of that certificate. So you'll have to review whether the calculation which is given or the basis which is given to arrive at particular result, that is correct or not. Let's say if you talk about the valuation, if you're giving any certificate related to this, so you don't need to arrive at the correct valuation, but you have to see whether the basis is available for that valuation or not. That you have to check in. While filing any DRHP, or I can say while preparing yourself for any either the main board or the SME IPO, you have to follow the rule of 3R. सर अब ये 3R क्या है, ये कुछ नया आप लेके आ गए हो. So the 3R is very important. The one is robustness. On what robustness? It's a robustness on your financials and your business performance. If your financials numbers are robust, correct, accurate, your business performance is perfect, up to the mark, then you are going to create a history, sir. In so many IPOs, you have seen this. The second one is realistic. Sir, what realistic is, why this is important? Realistic, sir, क्या जरूरत है? हम तो सब कुछ जो देते हैं सर रियलिस्टिक ही देते हैं. Sir, you have seen Nykaa, you have seen Paytm, so many IPOs you have seen जो कि बस ऐसे गए हैं और नीचे आ गए हैं. So if you don't want to be in that race, you want to create your own history or you want to make your IPO success, so you have to see whether the valuation, whatever you have given, is realistic or not. Or you can say in simple language, valuation ठीक ठाक है, okay type का है या नहीं. The third R is right timing. Sir, why? बिकॉज आपको भी पता है अभी सिचुएशन कैसी चल रही है, मार्केट कैसे नीचे जा रहा है. सो कई बार होता है जब उस इंडस्ट्री में थोड़ा ज्यादा उथल पुथल होती है, थिंग्स आर नॉट ऑन राइट ट्रैक. If you will launch your IPO, if you list your IPO at that time, so you might not achieve what you are expected actually or you have thought of. So these three are very important while preparing or planning for any IPO. Then moving further, the companies which I have told you with respect to some issues, I will talk about them later. Now coming, since my deliberation should be on limited to this auditor concerns is, so I will be again coming on the same. So when you review the financial or certificate, so what kind of financial or certificates you are going to certify? So sir, first of all, you have to be the peer reviewed firm. If you're not peer reviewed firm, then you cannot be entertained on this IPO. So first get yourself peer reviewed from ICI, only then exchange will recognize you and your client will definitely respect you and appoint you for this purpose. So for 3 year and the stub period, this cannot exceed the 6 month. So for this period, restated financial statement of the company, you will review and give your audit report, or you can say examination report on this, on this restatement. And the adjustments which you will find that you need to report it. And if any inconsistency either on the accounting policy, or you can say if any standard has not been followed, then you have to report accordingly. First of all, you have to correct it in the restatement. If restated financials are again need some modification, just do it. The second point is comfort letter. Sir, is it required as per SEBI LODR? No, sir. But your merchant banker requires some comfort letter, that is check box kind of thing. So you need to do it. But before giving comfort letter, give comfort to yourself first. Whether you are giving correct or 100% accuracy, that is called the certificate. Whether the statement which is given by you is actually supported by any evidence or not, you have verified that document or supporting, you are satisfied or not. If you are satisfied, only then give this statement, otherwise not. Then you have to see the statement of some special some possible tax benefit if the company is going to avail. Then if one certificate you have to give for the eligibility under the regulation 6.1 of this SEBI LODR. So you have to again check whether the eligibility criteria has been fulfilled, completed or not. Then consent letter from the auditor, because their name is to be given in this DRHP. Some governance certificate, corporate governance certificate for the boards and its composition you have to give. Then certificate for e-shop, if any, you have to give, because it is required as per SEBI guideline. Then certificate on post-issue capitalization after discovery of this issue price. So this you have to certify. So while certifying these kind of statements, be diligent, go thoroughly on all the document, give proper time, so that you first comfort yourself, only then give comfort later to others. After this few other certificate, I will just read it through for your knowledge, so that you can be familiar. You just see the certifying that the allotment is as per the basis of allotment what was given or not. So you have to give the certificate for issue of issue expenses. Then the offer price, what is the basis for offer price, that you have to certify. Then the promoter contribution, if any required, then you have to give that one as well. Accounting policies are correct or not, or is there any change in the accounting policy, you have to certify. If there is buildup of capital, whether the correct source was there, or genuine buildup of capital is not there, or yes, it is genuine buildup of capital, you have to certify. Then for insurance, if any dividend, if there is any dividend, then you have to give the certificate on dividend. For the group companies, you have to give the certificate. So a lot of certificate you have to issue. So ensure that whenever you are giving certificate, you have just not relied on the statement of merchant banker or the management, but you have reviewed it thoroughly. For the SME IPO, Ind AS is not mandatory, but if you wish to, you can. But IGAP, or you can say accounting standards, are mandatory. So if the financial statement, if standards has not been followed, then you have to make it as per the accounting standard. Or if you are making it in Ind AS, or earlier if you have prepared in AS, now you are making it in Ind AS, so you have to restate your financial statement from AS to Ind AS for all these 3 years. Now, once your DRHP is ready and you submit it to the exchange, you get some of the observation, or you can say some of the query. अक्सर हमारी आदत होती है ना कि हम बिना गलती निकाले तो मानते ही नहीं है, कुछ तो गलती चाहिए. तो सर ऐसे ही likewise some other auditor are sitting at the back, who are actually reviewing your details properly. They are thoroughly understanding your thought process and the story behind your comments which you have given on your DRHP, and basis that they will give some of the query which you have to answer. And if your reply is not satisfactory, in that case, maybe your DRHP got rejected. So I have just categorized some of the issues which they may raise. So one can be with respect to the capital structure. Second one is with respect to the objective. This is very much important because now it's not your closely held company. Now you are taking the funds from public, so your responsibility is huge now. You have to report to so many agencies that whatever fund we have taken from public is actually utilized for the purpose which we have referred in DRHP. For this IPO monitoring, if the exposure is more than 100 crores, so you also need to get the monitoring agency report. The credit rating agency give monitoring report with respect to the utilization. They thoroughly check whether the purpose which was defined, let's say the corporate purpose or repayment to some loans or general purpose. So whether whatever purpose you have defined initially, and they will match with the actual utilization of fund, and post that they will give report whether there is any deviation or not. Around 5 to 10% deviation, that is okay. They usually give a small remark, but if more than that, so they highlight that yes, the utilization of fund is not as per the commitment in DRHP. So there is huge deviation, and this also give risk to you because you have just misappropriated the things of the fund. Next, in some of the cases or very small size of company, when they are like a startup, so when they give business model of their own business, so sometimes it's so much complex, and that is not understandable by the layman. They do not understand what exactly my company is going to do with this fund, why they require this kind of fund. So in that cases also, the exchange give you the query for the further explanation, and if you are again not able to justify the uses, then they have the last resort just to reject. Post that, the scrutiny of financial statement, which Manikji has elaborated, and further I will take few of the examples with you. Then existing cases, legal cases upon the company. So why it is very important? Because it affect your cash flow, and sometimes if there is change in the government policies, or if your case is with the government for some big violation of any regulatory norms, so it may also cause the create the question on going concern of your company, so that can be a big loss for you. So for that purpose, giving proper complete detail about the case is mandatory in DRHP. Then about the contingent liability, which actually gives some idea how much outflow we can expect and at what level we are standing at the case which is against us, which is in our favor, that is that hardly matters. With the cases which are against us, that is actually the red alert for any investor, because they will see how much risk company has taken, what the contingent liabilities they have. After that, we'll discuss some of the other general points also, what usually be seen at the time of scrutiny of your DRHP. So the first point which we have talked about was the capital structure. So why capital structure is required? So let's say I have built up, or the promoter of the company has built up capital through circular transaction, just for the IPO or some other, you can say, for they have just window dressed. So if this is the circular transaction, through that the capital has been built up, then sir, you are going to withdraw, or it will definitely got rejected. Sometimes so much layerings are there so that the ultimate promoter could not be identifiable. In that case also, there are chances that you first get query, and if you are still not able to justify, then it may be rejected. In other case, if the capital contribution has not been complied with the SEBI LODR, SEBI ICDR, then also your this DRHP may get rejected. So this was the some few pointers with respect to the capital structure. So whenever as the auditor you are verifying the financial, so see whether the actual capital was introduced or not, or it was just mere entry or adjustment which promoter has created just to show the capital. So you have to see whether the actual capital was put in or not. Next point which I have told you was why I'm raising the capital, why I need funds from the market. So this purpose you have to give. So let's say it was for the working capital requirement, and there is sudden the working capital is not aligned with that proposal, or we are not able to or not, in that case they will give you first, they will give you the query for the justification, and if you're not able to provide the substantial reason or justification in this case, then the case may get rejected. Second point, there is any repayment of loan or the intercorporate deposit, or you can say any other borrowing or in similar nature, and the issuer is not able to is not in a position to disclose properly the ultimate purpose for which the loan was taken. Let's say loans is there in my books of account, but I don't know why I have taken loan. So this is very big, very vague answer, that yes, loan is standing in my books, but I'm not able to justify for what purpose I have taken that loan and what are the probability of repayment, or for how long time I will take to get it repaid. So this kind of vague justification will really harm you. So be prepared. First, read properly what numbers you have in your financial statement. Next, if you talk about in some of the cases, the SME get fund or raise fund for some capital expansion or capital expenditure. You can say they are going to expand their manufacturing capacity, or they are going to add some new plant in their manufacturing setup. So for that purpose, they need to give, they need to do some kind of capital expenditure. But let's say I have said that I have purchased one of the land where I need to set up one plant on, and that plant is actually required around 8 crores of capital expenditure and around 2 crores of this working capital. So mota moti around 10 crore they have required. But when you see in the financial statement, they don't have any land. So if they don't have land, and after a query, when the query was raised, so it was told that, sir, that is proposed to be purchased. So if you don't have land or don't have plan how to get the land on which this plant and machinery to be installed, in that case, how you're going to justify your reasoning which you have presented in your DRHP? So be aware what you are going to justify. This you have to convey properly. Further, with respect to like the business model, what I have said, in some of the cases the business model looks very complex or exaggerated, or you can say some kind of misleading statements are there. So investor do not get exactly what they are going to do, or this usually happen in some of the cases of startups also. So you have to be very careful while drafting the language of your business model. What hierarchy you have to follow, was the pitching model you have to follow, that you have to be very careful about that. Now moving on the financial statement part. Why financial statement scrutiny is important, we have already discussed. Because जैसे होता है ना हमारे शरीर में, अगर आप देखते हो कि अगर हमारे शरीर से खून निकल जाए, ब्लड निकल जाए, तो क्या हम सरवाइव कर पाएंगे? नहीं कर पाएंगे. सो लाइकवाइज अगर किसी बिजनेस में फाइनेंस नहीं है, उनके फाइनेंशियल स्टेटमेंट से ठीक नहीं है, जो नंबर वो रिपोर्ट कर रहे हैं, इफ दैट नंबर्स आर नॉट गुड, that are not giving proper sense, then can anybody rely on the issue of a company? Can anybody invest on that company where financials are not too good or they are not reliable? सर आजकल तो कुछ केसेस में हो रहा है, बिकॉज आई डोंट नो व्हाट थिंग्स आर हैपनिंग इन द मार्केट, बट कुछ भी हो रहा है. But to be realistic and be practical, because it's a really hard-earned money and where you are going to invest. So be very careful. Financials are the heart of any issue. What debts are there, what capital, what profitability, what growth, you have to see properly. So for that reason, exchange also scrutinizes thoroughly the financial statement which you have given. If there is sudden pert in the business just before the filing of your DRHP, it shows that earlier things were like smooth, but sudden there is huge jump in the business, which shows like we have got some huge order, uh, crores of order which we have in hand, through which I will do this kind of profit in my business. But it was not actually earlier. So either you have entered into different business model, or earlier you were not doing good, now you have, after getting a small fund from the public, you will like कि अब तो मैं सब कुछ कर सकता हूँ. So if your projections or number which you have shared, whether it's about the income, or you can say the profitability, EBITDA, or debtors, or creditors, or the asset, what you have given are actually presentable, in line with your past trend or not, or if there is sudden change, that change must be justified with supporting document. Let's say I have said that I have received one of the order, one big order which I have. For that I have planned to expand my manufacturing capacity to accommodate this order. And yes, you have also mentioned the detail of that order, like this much order, and from this company we have received the order. Or when you get any query, you have properly justified, then it's good. But in some of the cases, if not able to justify or clarify properly with respect to these changes, then it could be a big mistake from your side. Second point, which is related to the audit report. Audit report are not only your company, but if you have the subsidiary and your auditor either in your company or any subsidiary company, they have given some qualification remarks. And if that qualification remarks are so much impactful to your financial, like the big mistake in the adoption of accounting policy or change in the accounting policy over the period, if that has impacted to your business, that can be impacted your profit, your EBITDA, then it's a concern for you in DRHP also. This has to be clarified. Let's say I have overstated profit in last few years just because of the adoption of revenue recognition policy. Let's say I have just in a construction sector or real estate, and I have opted the percentage of completion method, which is not as per the Ind AS, and now I have shifted to Ind AS, and I have to change the policy, but I have not done this, through which I have shown some profit, but actually it should not. So this will create a big concern. So you have to see properly. If there is any change in the accounting policies which are in contradiction with the accounting standard, then you have to take care it with proper care. Another very big issue with respect to the related party. In smaller or SME cases, in so many cases, we have seen that the related party transactions are not justified or not properly documented. the arm length price has not been tested. So here you have to do it. Let's say you have not followed the 188 of Companies Act. So this will again be big concern for you. Or if your auditor has made some concern or given the qualification with respect to the related party transaction in your audit report, then it will definitely it will create a big issue for you. So before going for this issue at the time of planning stage, when you scrutinize your financial for last 3 years, you see all these issues whether this exists in your financial statement or not. If not, then it's a good opportunity for you, and if they exist, then you have to plan it accordingly. With respect to the litigations or legal cases, that includes some of the regulatory actions. So if issuer continuation or going concern is dependent on this case, in that case you have to be very careful, because if the outcome of any litigation or the case in the near future will be against you, then you will have to shut your business. Let's say if you are dealing in a plastic sector, and let's say government ban that plastic industry or particular level of plastic which you deals in, then it can be a big issue for you. Or let's say if particular environmental safety equipments if you are dealing in, and sudden there is any change, or you can say if there was any violation in this safety guideline which you have made, and that has not been cured, and again you are getting regular notices and just case has not been closed yet, then this you have to disclose in DRHP that what was the fact, what the case was there, what violation, and what is the present situation of your case. And through that, the exchange and the investor will decide whether to go with this company or not, because the future is alarming. There is some red flag in the company, so the amount which we are going to invest is not safe at all. So as per this SEBI ICDR regulation 2018, you will have to report properly whatever cases or litigation exist in your company. If there is willful conceded, if you have willfully conceded these cases or these kind of disclosure, then it can be a big risk for you. Some other issues, if you talk about the SEBI LODR and SEBI ICDR, or you can say Schedule 6, which you have to follow. If you fail to make the disclosure, or if there is any major non-compliance, or you can say the violation, material violation in the provision of the Companies Act or SEBI regulation, then it would be difficult situation for you. Like Section 42, if there is non-compliance of the provision of Section 42 that talks about the contribution, the offer through private placement. If there was any private placement, if you have not complied with the Section 42, then it can be a big issue for you. Coming on the next phase, that when you file your DRHP, you also mention your website of your company. So that will also be visited by the authority or exchange. They will see how presentable your website or company website is, what information you have shown out there. Another part would be the physical verification of your company address, which you have given, either the plant or registered office, whatever you have given. So the rule is to verify whether the companies actually exist or not, because we have seen in movie that in many cases they are listed, but the share prices are moving use increase, you can see in share prices, but there is no business in the company, even the office or plant is doesn't exist. So in this case, when you file, so be ready, so inspection can be done. And if you have reported that we have a very big manufacturing unit and it actually does not exist, then you can imagine what situation would be. Further, if there is any complaint about the company or any concern that has been raised, so that to be dealt with properly. Apart from this, when you prepare the financial statement, can anybody tell me there is a recent change with respect to net worth? Can anybody tell me what exactly the change is? No, sorry, EBITDA, net worth. Anybody? I'll just see on the chat box, or Kedar sir will help me to see whether participants has given any reply or not. Can anybody tell me the changes? Is there any change in EBITDA, net worth, or year of existence or not? First tell me this, then I will discuss with you whether any change happens, or I'm just checking you are still awake or not.
Anilji, I'll request maybe you will have to help us whether there is any response in the chat box. I doubt I can see the answers in the chat box what Anirudh has asked to make it more exciting, though it has already been very exciting session going on. So Anilji, you
Sir,
can
there
please
is
check and let us.
still no question in the
Okay.
chat box, but we have received from webcast team certain questions raised by the members. So I have already forwarded to you.
Yeah, but just see that if there are any responses on the chat box for the question Anirudh has just asked the participants with respect to the recent changes made in SME IPOs
Yes.
for net worth or EBITDA requirements or the
Sure, sir.
existence
Sure,
of the
sir.
entities requirements. Let's wait for 30 seconds and then maybe Anirudh will help us in terms of answering those further. Right. So I think, to my knowledge, Anirudh, that one change which has recently happened in December 24 for SME IPOs with respect to EBITDA requirement is that in at least 2 out of 3 preceding financial years, the company must have an
Sir,
EBITDA profit of
you
1 CR.
are master, sir. This was not for you.
I'm just trying to add to that. I mean, then you are please.
Yes, earlier there was no such criteria for the operating profit for any company in this SME. But looking the past trend in few months, you can say, or a year, because huge surge we have seen in the SME IPO. So just to safeguard the investors' money, they have put in one criteria with respect to the EBITDA of 1 CR in the in 2 out of the 3 year which was required, because if the company is not able to give at least 1 CR of EBITDA, so then we cannot rely whether it will sustain for a long run or not. So it was not the criteria earlier. Now it will encourage the only SMEs with the scale of operation, with the stability they have. So only they can come forward and to register here.
Right. And I think just to add to this, Anirudh, so will this criteria also apply for the stub period or it's only for the financial year completion? So my question is that if, for example, 30th September, 6 months is the stub period, which is also going in DRHP, so
So
will
this is
this
for
one
the last three.
last 3? Okay.
Rest of period it will not be checked.
Right. And EBITDA will include other income and all that. I mean, it will exclude the depreciation and interest, right?
Yes, yes.
You can continue, please.
Yes. So at the end, I will just name some of the companies which I have told you कि जहाँ पे आपने बिल्कुल अब देखा फिर नीचे हुआ, ये कुछ issues थे या कुछ मैं companies के आपको, so I will share some of the name of the company. You can also Google it, where the DRHP has been rejected. Basis the same point which we have discussed in our session. So the one was you can say Traffic Soul ITS technology. So in this case, BSC has just put on hold because the some investigation on some allegation of falsified financial statement on this company was there, which was concealed actually, जो कि छुपाया गया. So for that reason, it was just rejected. Another company, if you heard about Boss Packaging, so in this company, the company the bidding of exceeding 1000 crore. This is very similar, which we have seen in case of two-wheeler motor vehicle company of Delhi bike dealer, who has just required around 12 crore of rupee, but this was oversubscribed with 4800 crore of bid. But in the case which I'm telling you, so here this has raised the red flag about the legitimacy of the bid amount and the company's operational status. When exchange has scrutinized in detail the DRHP, where they have seen there is disparity between the company's size and the overwhelming response which they have received, they further got some clarification which was not satisfactory, and through that reason this IPO was got cancelled. Again, if you have heard about the C2C advanced system, so in this case, SEBI has mandated some independent audit for this company after concern across regarding its financials and utilization of this audit, this IPO proceeds, which has indicated that the exchange were vigilant and the financial statement were and the disclosure were not in line, were not properly, and there was diversion in earlier IPO. So for that reason, this got rejected. Another, if you heard about the Shiv Texem Limited, one more I will share with you, that is Siren. It was Rosmeta Digital Services. So many, I have around 15, 20 companies list, because I was just reviewing whether the issues which we usually get in the financial statement from the exchanges actually on the other companies or not, या फिर हमारे ही जो मर्चेंट बैंकर है, हम जो साथ में करते हैं, हमारे पास ही ज़्यादा issues आते हैं. So when we have seen or scrutinized or try to find out using the AI. So I have found that so many companies are there where the DRHP has been filed and it was very vague, no proper details were there, no proper disclosures were there. And when they have exchange have asked for the justification, even the justification and clarification were not up to the mark. So for that reason, the DRHP got rejected, and it was told try again after some improvement. So this was a little bit from my side. So at the end, I usually ask one question. So the SME, we all know SME from start. Last around 2 hours, we are talking about the SME, MSME, SME IPO. So my last question to all of you, if anybody want to answer, do you have any idea about the threshold criteria of this SME? What is criteria for micro or small or medium enterprises? How you're going to categorize this criteria or this classification? If anybody can answer, I will wait for 30 seconds. Then I will end up my session here. Anybody want to answer? एक और सवाल इसके साथ में डाल देता हूं सर. हियर इट इज SME IPO. सर माइक्रो कहाँ गया? माइक्रो नहीं कर सकता है क्या? I will not answer this. So if anybody want to answer these two questions, so we can discuss and then we can close it. So Kapil sir, I think you need to uh, come in because people are just.
Yes, Anirudh. Sure, sure. So, first of all, thanks, Anirudh, for the very nice session, and it was actually very enlightening and useful. And I think another thing which I liked more and which I'll also try to improve on that is that I mean, you made the entire presentation without using any screen. So I was also feeling as if you are sitting across to me and we are speaking like one on one, and which actually gives a but it increases the extent of you absorb more, you grasp more while you have such a good presentation without any PowerPoint display, and it feels like as if we are discussing together. So thanks Anirudh, thanks Manik for the great sessions, and it was actually very useful, relevant, and insightful. And we have many questions with us, but I'll try to ask as many as I can during given the restrictions of time and other things. But for the audience, the team will try to answer those questions separately post the session also by way of email or otherwise. So that's fine. I mean, rest assured on that. Okay. So my question is to both of you. Any one of you wants to pick that up. So one is that can an LLP which is already in existence from 3 years can convert itself into public limited company and go for SME listing?
Yes, it can be.
Yes, it can. Okay. Okay. Right. Another is also a related question that there is a proprietorship firm which is 10 years old. It got converted into a private company this year, which may be 24, 25 or financial year. Can it go for SME IPO next year?
Sir, it's actually a little tricky because as a proprietorship, when you convert, because proprietorship firm cannot be converted into a company. So when you start a company, it's like a new business. So in my experience and to my limited knowledge, it should not be. But as if you see the SEBI eligibility criteria, so they have mentioned either LLP or proprietorship firm. If they have converted, then they can.
Okay. Okay. But I was saying
I
that the
haven't seen this practical case actually.
Okay, understood. I also, but the proprietorship firm cannot be converted directly into a company. Is that what you're saying? Is that
Yes,
what I,
yes.
okay, understood. Um, Another question is, so Manik, you can also answer or add on to any of the question. I mean, I'm just referring every question to both of you. I mean,
No. That's completely fine. Please continue.
and are the auditors responsible for accuracy of DRHP? Also, this is the question.
Should I?
Yeah, go ahead.
Yeah. So, see, during our my deliberation, I have also emphasized on this. So, auditor is not responsible for the accuracy, but he will be responsible what basis has been taken. Like I have taken the example of valuation. So, whether any valuation report or some working is there, for that purpose, auditor is responsible. Whether the valuation which has been taken from valuer is correct or not, that's not the auditor's responsibility.
Just to add to
Understood.
what Anuruddha is just saying, so if you look at it while you were presenting, we said that you have to create a couple of bridges between the audited financial statements to DRHP to final prospectus. So whatever is something that as an auditor you have a point on, and if that is directly picked up into the DRHP, now that is something that you can be held accountable for. But if any changes or any processing of information happens post this, or is it not covered through a comfort letters or any other attestation that you might have done as a part of supporting or reviewing the company's records throughout the IPO process, then that is something that cannot be held accountable for auditor just because they are looking at the DRHP. That does not mean that it covers everything, but anything that can be directly attributed to either of your audit opinion or any other certification or letters that has been issued. is something that the auditor still is accountable for.
Right. Thank you. Another question is that with this respect to the recent changes made in December for SME IPOs. So one change is that funds raised through IPO proceeds cannot be used to repay the loans from promoters, promoter groups, or related parties. Does that mean that the loan repayment to other unrelated parties or loans from banks or FIs, other lenders can be paid out of the proceeds of the IPO, but the restriction applies only to the loans from promoters related parties? Is that what the
Yes, yes.
requirement of this?
Because in some of the cases, you may also have seen the diversion of funds through some of the related party. To curb that, this has come in. So still you can pay repayment to any lender, FII, or any of the banks where you have taken the loan or lending.
And I think just to add to that, the way I actually approach these changes is the intention is, as Anuruddh said, that it's to avoid diversion, or it's to avoid people who approach SME IPO not with a growth or capital reinvestment mindset, but they approach SME and SME IPO as an opportunity to cash out, and then kind of not really think about what's the business growth story is gonna be. So a company that is carrying a lot of debt but still has good solid business plans using IPOs funds to pay off that debt to external parties, and then saving on the finance cost to kind of manage the working capital better or manage the working cash flows better, and then using it to propel the business, is something that the exchanges would want companies to do. But a company who's just kind of getting investors money and then paying it at a higher valuation to the proprietors or the as a part of offer for sale securities, I think that is where the exchange is trying to curb, to say that we want the retail investors' money to become a growth engine for these MSME companies, so that then these companies can really propel economy as a large, rather than just cashing out few individuals. I think that is the intent as an auditor, that you, or the question as an auditor, that you should keep in mind and always ask when you are looking at these restrictions or guidelines.
Right. And then another question is for general corporate purpose allocation as part of the utilization of proceeds of IPO funds. So GCP allocation is capped at 15% of the total issue size, or 10 CR, whichever is lower. So, I mean, it's a general discussion I just wanted to have. That is, this 10 years cap on utilization of funds as GC for GC purposes, general corporate purpose, isn't it too very low? I mean, looking at the size of the company. So, for example, if you're raising 200 CR, maybe 300 CR, and restricting the general corporate purpose utilization allocation to 10 CR only, or 15% of the total issue size on a lower side, I mean, whichever is lower.
Yes,
So, I mean, ideally, shouldn't it be higher? I mean those.
yes, sir. It is at lower side. Even we face a challenge on this. That is why
Right.
I said that in some cases there is some deviation. What was proposed and what actually happened. So that's happened sometime because it may be on the lower side.
Okay.
No, I agree. I think it's a little it's too conservative for routine, or for, if even if you compare with the global benchmarks, it's a little too conservative. But I think again the intent here is that if you're going for, as an MSME or as an SME, if you're going for an IPO, you should know where you're gonna use that funds very specifically, which is a little difficult in the real world. But I think they're trying to drive it through regulation to make sure that an SME is raising funds for a very specified or dedicated purpose, and not a majority of it should be for general corporate purposes. So I think that can be one inference that I can draw, but from an opinion perspective, it's a little too specific.
Right. Thanks. It's good to have both of you views, your views on this. And maybe I'll take this as last question. Looking at the time constraints we have now. So, is India's applicable to entity listed or in the process of listing on SME board? I mean, so, or if not, why then where it is written that it can go under Indian GAAP as well. So that's the question.
So as if you see the SEBI LODR, so it's not required for SMEs. It's not mandatory. If they voluntarily opt, they can, but it's not mandatory to opt in the NDS financial statement.
So if a company is preparing the financial statement under Indian GAAP and they are planning for an SME IPO, they
That
can continue to do so. But a company who's planning an IPO for main bourses, they needs to necessarily have the
That's it,
financial
yes.
statement.
For main board, it's mandatory.
And in
Perfect.
that case, I think anyway the other limits would apply to them if they're big enough to kind of get to the main bourses. So they automatically might have other differing regulations that might warrant them to report in days.
Right. Right. So I think with this I'll end this round of questions from you, and thanks Anirudh, thanks Manik for this wonderful session on this very relevant topic of nowadays on SME IPOs, and thanks for Anilji and Double A SB for organizing this session for this relevant topic, which is the talk of the town nowadays. Every person talks about the SMEs IPOs, and as you rightly picked up, Anirudh, during your session, that there have been I mean, for that, I think it was resourceful. You picked that up, the dealership for Yamaha, where I mean, it became the news of the day on that day when it got that much subscriptions just with two dealerships. This IPO discussion has now become irrespective whether it's within the earlier it used to be within the corporates or within the consultants. But nowadays, I mean, even you talk to any person, I mean, you will find that they are also knowledgeable about IPO. They know what is happening. They know what IPOs are open. They know how many IPOs subscribed or how many times. I mean, this is the news and the talks of the town nowadays. So very relevant topic, very insightful sessions from both of you, Manik and Anirudh, and thank you very much for having and for having this sessions being done. And with this, I would request Anilji to just give the last closing and thanks message, and then we will go on. Over to you, Anilji.
Thank you, Kapilji, for guiding throughout the session.
Next time, Kapil says to take at least a 2-hour session on this.
No, but these were also, I mean, very, very good sessions. You always keep on learning new things. I mean, whenever you have these discussions around any topic, right? Anilji, you're just wrapping this up?
Can you hear?
No. No, I think there is some technical glitch. I mean, Anirudh, Manik, and the audience. So our apologies for that. And again, I'll once again thanks to both of you and AASB
Can
for
you hear
organizing this
me?
session. Yeah, we can hear you now.
टेक्निकल इशू था सर, वो मैं बहुत देर से ट्राई कर रहा था.
No
So thank you
problem.
so much, Manik sir and Anirudh sir. It was a wonderful session, and you have covered basically all the aspects relating to this SME IPOs, and Kapil sir has also added into this. So on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, heartiest thanks towards all the three dignitaries, all the three learned chartered accountants, ye Manik ji, Anirudh ji, for wonderful deliberation, as well as Kapil sir for wonderfully coordinating as well as giving his insights. So thank you so much, Manik sir, Anirudh sir, for giving your insights and sharing your expertise with all our members. Hope our members have gained a lot through your deliberation. More than 1,300 members are live at this particular time. So thank you so much once again to all of you. I also thanks all the participants for today's webinar. And once again, thanks to all three for giving their kind consent in spite of having busy schedule and giving your consent to moderate, to deliberate. Manik sir was busy till last night. I know कि उनकी कोई clients out of world out of India आए हुए थे, and Anirudh sir was also busy. Kapil sir से भी मैंने time लिया. So every time sir, मैं hats off to you, everyone to आप मुझे time देते हैं sir. Thank you so much sir. Thank you so much.
Thank you. So nice.
Good evening.
Welcome.
Thank you. Pleasure.
Good evening sir. Thank you sir. Thank you.
Bye.